silver is the Roach Motel if you're short. And to your original point, silver lags in the bigger moves. It doesn't lead. And so we are in the middle of potentially the biggest move of all time. There's your title, right? And that move would say that gold's at 3,300 and it's staying there. And as long as it stays there, then the other commodities have to catch up to it.
Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Vince Lency. He runs a Substack called vblgoldfix.substack.com. I highly recommend it. His analysis is great. He's also very active on X. Vince, welcome back to the channel. And what's your handle on X again?
My handle on X is confusing. It's my old backup account. It's Soren the K, Sorenthek, on X or Twitter. So that's it there. But
That's
Substack's a better way to access me.
yeah, and then it's here. There's the and
Oh, there.
we can start with this tweet or post. So
Oh
yeah,
yeah,
Soren, uh, Thek. So
right.
yeah, you posted that yesterday, and I found it quite interesting. You said, "Dear neo-Keynesian financial geniuses, F your US dollar rate correlation. They're worthless, made up of abstractions that only work when enough paycheck-dependent minions rationalize them after the fact, like any religion. This is the reset. It began with gold 3 years ago. Start uninverting your rate correlation charts. And this was in relationship to this article on Zero Hedge, which I had to like go. There's a paywall, and I don't pay for Zero Hedge, but I got it anyways. And
Okay.
basically, Morgan Stanley, in the beginning of the year, they thought that the 10-year yield and the dollar would go down together, and they're very surprised that it hasn't. And so maybe you can talk about that. And you mentioned something about minions. What was that term again before we started?
We were talking about right before we started recording, you and I were talking about that. It was the leaders, the religious leaders, the Pope, whoever it is running these banks, their minions or acolytes or whatever you want to call them. They're still preaching, the gospel of Neo-Keynesian, but the bosses are positioning for something entirely different. So yeah, it's the minions and the bosses. The analysts aren't really
Yeah.
telling you what's going on. I don't know if they're dumb or if they're doing what they're told. I can't tell.
Well,
But
maybe they don't see the forest for the trees. They're so used to like 40 years of financialization, they see it continuing. Do you really mean that the Vatican and those people are in charge, or
oh
it,
no, no, no. I mean a vertical hierarchy.
it was an analogy?
Yeah, yeah. Well, we're using a religion analogy.
Some people actually think the Vatican has a lot of gold, but I don't think so. But anyway, maybe you could talk about this because I agree 100% with what you said about these neo-Keynesians and the fact that they still think that treasuries are going to be the place to be. So
Uh,
let you touch.
yeah, yeah. That was like I had a moment and I just kind of let it out there for a second. Uh, and it seems like an what's the word, untethered rant or mini rant, but it's based on relatively recent history. And uh, if you read the analysis by Morgan Stanley, what they're just zooming out a little bit, they're telling you, hey, like you said, we were surprised by what happened, and now we're going to tell you how to trade it. So uh, that's fair enough. And it's good. Don't get me wrong, it's good, but it still works in the neo-Keynesian framework. And I don't mean neo-Keynesianism is dead yet. I know that's something people like to hear if they're especially if they're Austrian or they're for real money. But I do mean to say that I can see. I have, it was a very visceral moment for me because what I'm seeing now come out of most of the banks, the Western banks, with regards to Treasury. They're all talking about Treasury rates and the dollar now. They're all marveling and commenting on the disparate relationships. And there are legitimate reasons for that. And there are also legitimate reasons for it to only be temporary. Fine. That's the Neo-Keynesian point. I get that. Okay. But the reason that I just kind of like tweaked when I read that was it reminds me of 22 when they started talking about gold. Gold is going up. Rates are going up. Well, if gold's going up and rates are going up, and you have to invert the rate curve. Rates are going up and gold's going up. Higher rates should undermine the gold rally, and it didn't. And then the dollar got strong, and the higher dollar should undermine the gold rally, and it didn't. And so for about 2 years, I mean, I was looking at this before the war started in 22, but it became more obvious when the war started. We all could see after the war started. But what 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 I noticed was starting, there's a path. People talk about snapshots. The path at the banking level was, I mean, I'll give you three stages. Stage one, gold should retrace because of rates and the dollar. Stage two, this is all coming out of the bank analysis. Stage two, um, gold should retrace, but we're not going to sell it. We think there is something changing in the market. Simultaneously, at that same stage, it's a mystery. We don't understand. Now that's complete horseshit. Excuse my French. They do understand at the papal level, not at the lowly priest level, not at the Neo-Keynesian evangelical person level. So you went from stage one, it's going to regress to the mean. Gold can't stay up here. Stage two, you know, it should regress to the mean, but we're not going to tell you to we're not going to tell you to sell it anymore. And then stage three was, and I kid you not, every major bullion bank in the West and some, well, Europe and US combined, came out with their new models. And their new models were a complete pivot. See, and the pivot was essentially we look at gold as a proxy for the dollar. Supply and demand are known, and the dollar goes up, gold goes down. The dollar goes down, gold goes up, and the rates and all that too. And that's entirely all they did. So they would look at that and say, from a volatility point of view, if it gets stretched, it'll come back. If it gets stretched, it'll come back. And now the new models that all of them came out with the new models, and they were good. And the thing is, they all came out within weeks of each other, and um, they all came out saying different versions of the same thing. And they didn't all just come up with these ideas overnight, but the ideas were this. There are variations of it, but it goes like this.
Before we continue, I'd like to talk about the sponsor of this interview, Incogni. So we all know what spam is. We all know it's annoying. And chances are you check your email every day. And it's also likely that when you check your inbox, you're swamped. Yeah, swamped with marketing emails and maybe even emails involving a certain fictitious Nigerian prince. You've also likely answered phone calls only to be answered back by a robotic voice or someone claiming to be from an organization you trust. But from the moment that you speak to them that there's something not quite right. You find yourself wondering, how did they even get my details in the first place? Well, the answer is data brokers. Yes, data brokers. Anytime you sign up for a newsletter, register for a service, or fill in an online form, brokers they can buy and sell your information, yes, without your knowledge or consent, not just to marketers, but also spammers and cyber criminals. It may just be annoying phone calls and emails for now, but it can quickly escalate, yes, to identity theft, stalking, blackmail. While the number of cybercrime damages and complaints only continue to rise, up by 43% and 45% respectively in 2024. From 2019 to 2024, it's estimated almost $15 billion were reported lost, and 600,000 cybercrime complaints have been recorded by the FBI. Luckily, Incogni is here to help. Well, to get started with Incogni, you need to create an account, give them permission to work with you, and that's the hard stuff out of the way. So Incogni scans data broker databases for your personal information and sends out what's called removal requests. Progress reports will keep you informed about your requests, their progress, and how many have been completed. Incogni automatically rescans and keeps adding new data brokers and people search sites to their lists. So here at Moneco64, I'm giving you the chance to take back control of your data and personal information. All you need to do is enter the code Moneco64 at the link below to get 60% off an annual plan and secure your privacy today. So let's continue with the interview now.
We note that gold is no longer respecting the correlations tied to the dollar and tied to yields. We have therefore changed our model to price gold on a weighted average of correlations versus physical demand. And Goldman Sachs was way in front of everyone on that, probably because they were not short. Other banks, I think, were short and just kind of protecting themselves. And they were like, look, here's the physical demand coming out of China. Here's the physical demand coming out of China that's going through Switzerland. Here's the whole picture. The rates don't seem to matter anymore, without telling why. The reason was de-dollarization. We think gold has, and then they started to quantify it. And it was, for me as a gold person, it was a lovely thing. It's like, okay, 2% demand equals 10% price. These type of, earnings per share type of math. And I went and I witnessed that whole evolution from infancy to adolescence to adulthood. And I went, oh, they all had to do this at the same time, because the two or three banks that were bullish gold didn't have an opinion about the dollar. They all were strong dollar relationships. Oh, we all think the dollar's going up, so gold's going down. Dollar's going up, gold. And so when they changed their model to be favorable to gold, they also flipped bearish the dollar. So they were telling everyone, this is the funny part, for me anyway, really inside stuff. They were telling everyone fundamentals matter, supply and demand matters, and here's our model. But meanwhile, they also got bearish on the dollar. And so that whole lesson that I got, that whole evolution served me well. So when I saw Morgan Stanley come out and say, well, look at this, the dollar is too weak for yields. And I go, you may as well be talking about gold again. And so now they're in the stage where it's like, well, it should regress to the mean. And you could just see it's like one commodity at a time, one asset at a time, one tenet of the religious fervor that is Neo-Keynesianism is breaking, and it started with gold. And so I ranted at them out of nowhere to just basically say, I read the book, I know what's going on, and maybe you don't know what's going on, but your boss does, and this is over. Like, the dollar's going to rally again, and yield's going to come in again, and they'll all declare the dollar's back, but the world is different. So that was the reason for my neo-Keynesian rant. And it all comes down to incumbents who aren't challenged refuse to think of what could happen to them. And that's where we still are at the banking level. So,
Yeah, and one thing that I remember also in 21, 22, when we are getting ready for rate hikes, because again, the neo-Keynesians got it wrong on the inflation was transitory, right? So
same idea. That's right.
the other thing that I spoke about several times and have in the past is that in the 1970s you had interest rates rising generally and the bull market in gold. And I
Right.
think the reason for that was because it was a stagflationary environment. So yeah, I always a lot of people were saying, yeah, gold is going to go down because rates are going to go up. And they got it wrong. And the other thing, Vince, about the dollar and gold is if you look at the all-time low of the dollar index, it was March 2008 at 70.69.
I remember that. Yeah.
I
Yeah.
know that number well because that day gold topped at 1,031. That was
Right.
the day that JP Morgan took over Bear Stearns. And I remember I was trading some gold futures at the time and I'd done well and I actually got out of it for some reason. But if you look at 2008 till now, the dollar's gone, still up since then.
Right.
And gold has gone from 1,000 to 3,300.
Right. Right.
Over the long term as well, this relationship between gold and the dollar doesn't really hold.
No, it doesn't. In fact, that's part of the financialization of the markets. People are trading minute by minute correlations, but if you're so much more, we're so much more rewarded for having a longer term picture now than we were, say, 10 years ago, because we're in a change. And like you said, uh, gold on a day-to-day basis and the wiggles and waggles was a slave to the dollar, but over 5, 10 years, it really doesn't have any bearing on it. It's interesting that you frame it that way, because even though gold has rallied, this is like, I'm not a pushback, but kind of a corollary. Even though gold has rallied against the dollar since '08, right? We'll use that as an example. Um, the dollar has remained strong against emerging market currencies, right? I mean, you think it's almost like we'll let gold rally over the long run as long as we keep our power over EM currencies, and that's actually changing now as well. So anyway, yeah, I think you're right. The correlation is a fiction that's used to rationalize a philosophy that keeps you as an employee getting paid by your boss. Like, that's how I look at it. So
So you spoke briefly about de-dollarization. So I wanted to bring up something that you and Mavs
yeah,
wrote.
he's the author. I
Yeah,
just edit that, and we discuss these things.
yeah.
Yeah,
So it came out today. While we're speaking on June 10th. Trump got the call he wanted, and
right.
I've gone through that, and I don't know if I'm right, but it seems like there's a lot going on behind the scenes vis-a-vis rare earths and maybe Taiwan. Maybe you can touch upon that and how this like relates to or kind of connects to de-dollarization.
Yeah. Um, sure. I mean, there are. I haven't thought about this in a concise way. So let me try and put this together. First of all, Mavs is a fund portfolio manager on the macro side, mostly FX. and he operates out of Asia. So that's I'm going to keep him private. Other than that, but he's very geopolitically connected, and uh, well, it goes like this: the Chinese U.S. relationship through his lens is that China. The article says that China is prepared to give in. Give in is not the right word. Is prepared to compromise on many things. It won't compromise on Taiwan. So that's the backing into premise. But moving on to the rare earths part, uh, you know, a lot of people will say China is capitulating. Those are neo-Keynesian people, and you know what? It doesn't mean they're wrong. And on the West side, on the US side, I happen to feel like I have a good handle on where Trump's pressure point is. Like on China, I have no idea, but China, Trump's pressure point is if his popularity drops, he negotiates. And that's not a shallow thing. If his popularity drops, he can't hold sway over the rest of the GOP. He can't get like the American version of a coalition government. He can't get his stuff done. Stocks drop, popularity drops, and then his idea for tax cuts and all that other stuff goes out the window. He goes from Donald Trump to Liz Truss. If that happens, right? He can't get what he wants to get done. Thinking about your audience here when I said that. So Trump's popularity dropped, and now they're having a conversation. So for me, it was 50-50, right? Maybe Trump came to the table a little bit more aggressively. And it's 50-50. But someone in the auto industry, on the actually retail analyst who understands autos really well, he and I were talking. I'm like, I think China's capitulating, et cetera, et cetera. And I'm like, yeah, everyone hates Trump, but that's his style, et cetera. So I'm taking Trump's side in the conversation. And he goes, Vince, he goes, who do you think's going to give in first? The guy who needs rare earths, and if he doesn't get them, uh, in 6 months, they won't be able to sell an EV car in the US at all. Or the guy in China who has an authoritarian regime who could put down an uprising for the next 6 years if he has to. And his point, sarcastic and humorous at the same time, was basically this. The US is on a shorter time frame politically, economically, cars, and then he went on to, he's like, cars are everything. I mean, housing is everything, but cars are next to everything. If people can't buy the hot new item, EVs, because of lithium, well, that'll cripple our industry. And, that would be like laying off, 10% of our economy right away. And so Trump, who wants to keep his popularity, has a reason to come to the table. Xi's reason, I don't know, but you could guess that they have their own economic problems, and I'm not so sure how that's going to shake out. But coming back to the article, Mavs makes an interesting point. He ties these things together, what I just said, with the Taiwan thing, and the West. What he know the thing I think that made him pay attention was Trump's post, X post, truth post, whatever we're calling them, was very positive on a discussion and very level-headed too, mind you. Like that's something like, Trump's being level-headed now, and there must have been like a peace talk within the peace talk. But he didn't mention anything about Taiwan, which I would expect, okay? Although it would come up eventually. Xi's statement, which you're not privy to unless you're outside of the US sphere, able to get outside the US sphere, mentioned Taiwan. So Xi's playing the Taiwan card for his popularity, and Trump's playing the economic card. But, Mavs ties it together and he goes, they'll compromise on everything, but not Taiwan. So his conclusion, which is aggressive, is that there's a lot more going on behind the scenes with the Taiwan issue than we know. And he says that not just because of this one statement. His bias was there because he knows who the mayor of he knows who the what is the prime minister of Taiwan is, the president. I think they're called president, right? The president of Taiwan is. He understands that person is a problem. He understands that certain cabinet members in Taiwan are very pro color war. He understands that Xi can't bend on that. That's where Xi's popularity is. So that's the line in the sand. And so He gives a little bit of rare earth access. We back off on tariffs, and everything is there. But there's a China doesn't do. I'm quoting like a mafia thing here. China doesn't do favors; they collect debts. So whatever favors being done now comes out on the back end on Taiwan, and then he goes, and then Mavs goes into the military buildup. They have these new jets that are just outrageous. I mean, they were leaked, but they were probably leaked intentionally. I think it's called a PL-35, or I'm not sure what it is, but it's according to him and his military people, not in China itself. I don't want to get anyone in trouble. He says that they would take out the stealth fighters and stealth bombers because they operate subspace and all this other stuff. Anyway, and then there's another article out today that China's got two aircraft carriers outside the Pacific uh, uh, arena, and they're flexing. So I think this is what I said to him after I read the article. I said, you may not be right, but you will be in 6 months. So I really think that's where we are. Uh, China is getting ready, getting closer to doing something more active with Taiwan.
Yeah, I think it was Hegseth who warned. I mean, a few
Oh,
days.
he did?
Yeah, and even yesterday, I think it says Pete Hegseth, U.S. will go to war to stop China from taking Taiwan. Uh,
Yeah.
China warns U.S. not to play with fire on Taiwan as Hegseth brands Beijing imminent threat. So that's pretty interesting.
Well, I mean, let me ask you. I mean, you've been around the block. Do you think Trump is avoiding it just to avoid it and letting the other guys be the bad cops? This way he can distance himself from it. You know what I mean? Like
Yeah, could
he's
be.
pushing back. I mean, he's pushing back through his
Yeah.
uh
What about, I mean, a few years ago, Nancy Pelosi, when she was Speaker of the House, went to Taiwan.
I
Is
remember that.
yeah, is Trump as adamant as the Democrats to the to Taiwan remaining like independent? Because officially, since before Bush Senior, the U.S. has had a one China policy.
Right. Uh, that's a good question. I could just throw some things back at you and see if we agree. I think if you're looking at the U.S. Democrats versus Republicans, I think probably really at the highest levels they don't care as long as we can get our chips. So it's almost like when our platforms are built, when TSMC builds here, Taiwan Semiconductor, then we can let them have Taiwan back. But I guess we want to do it in a face-saving method. I also think that the Pelosi left is not making a big deal out of it now. Well, because they're more preoccupied with other parts of the world. So I think that the Taiwan thing is just not front page news for them yet. But maybe Hegseth is just letting me know, hey, we're not going away. I mean, we were talking about this. The U.S. has been one China policy since when George Bush was a CIA director.
Oh yeah, he went to China, didn't he? With
Yeah.
Barbara, and there are pictures of them in Beijing. And
Yeah, I mean, legally speaking, and apparently that's ultimately, eventually, that gives everyone cover for everything. We're not going to get in the way of that. But I guess from a human rights point of view, it's like negotiating. All right, we'll let you have Taiwan, but we want to make sure that there are things in place to protect human rights, something like that. And that'll satisfy the left. And we want to make sure that there are things in place to protect the chips being made, and that'll satisfy the right, and China will walk away, and uh, Xi will be vindicated, and everyone will declare victory. But yeah,
there you go.
that's
There
it.
he is with
Yeah, you remember that? I remember that.
19,
Yeah,
1974. So,
yeah, exactly. That was oh Jesus, that was right before Nixon was went to speak with Mao and cut that deal,
well, I think
right?
Nixon went before because
Oh, I'm sorry, 71 is
72,
when.
71, Nixon went.
And in 76, we closed the deal in a revisit. That was right after the what did they call the Jamaica Accords? After we completely threw gold out, then he went to China. Oh yeah, that was
Yeah.
yeah, George, going all the way back to 1974. We haven't changed our policy.
Yeah.
It's all rhetoric.
Oh, it's interesting that you think if is that Taiwan Semiconductor, if they start building all their chips in the US, then the US won't care anymore.
Well, I mean, I don't mean to be black and white about it. I'm just
Yeah.
generalized. I mean,
Yeah.
hyperbole aside, yeah, my point is, yeah, that's a supply chain.
Yeah.
That's a supply chain for us.
And do you think this underneath the surface, this problem with vis-a-vis Taiwan could be a reason, is that one of the reasons why China is buying so much gold and not adding on to treasuries because they can see what happened to Russia in 2022. And if there is some kind of conflict vis-a-vis Taiwan, I think they've got about just under 700 billion in treasuries. That could be frozen very quickly.
Yeah, I think Taiwan, I mean Taiwan, China's risk management, I think there's similarity in how I look at things as well. China looks at the worst case scenario and then works backwards from there. So the worst case scenario is Taiwan. That's where the line in the sand is. And what happens if there's a problem over Taiwan? Well, then China's going to be frozen out, right? So if they see that happening, then China's assets are going to be frozen out in the dollar system. And then they look at Russia and they say, all right, well, Russia's worst case scenario in their mind, whether you agree or not, was uh, the 2014 NATO coup, for lack of a better word. And I think from there, once China establishes the worst case scenario, then they work backwards and they go, all right, if this happens, we'll sell a third. If this happens, and so they're all looking at it that way, probabilistically. If this happens, then I'm going to do one third or one quarter. And so by the time the Taiwan event happens, whether it goes for or against them, they're going to have no dollars anyway. I mean, that's my feeling about it because
Yeah,
that'll
they're
kill.
chess and they're moving ahead, uh,
Yeah, yeah.
taking their moves ahead of the US. Yeah.
Right. I mean, the U.S., the West in general, but the U.S. specifically, is very election to election, and as a result, they're quarter to quarter, and we play very tactically,
Yeah.
and we can.
She doesn't have to worry about midterms.
Right. That's true. G doesn't have to worry about midterms. I mean, I've talked to Eric. Eric King Kong. He comes on here frequently, and I've talked to Bai about this, and Bai Zhaozhen, and uh, I've taken that stance. I'm like, oh, he doesn't have to worry about midterms. And the pushback I got from Bai was, he goes, "You're right. There's nothing challenging Xi right now except the 12 guys who run the party." And they put the line in the sand. See, he's a very progressive dude for China. China is very, uh, Neo-Keynesian. And he's going, no, hard money. He's changing their mindset because all the 12 Communist Party leaders, they're all loan dollars. So the work that he's done to get them to not fire him or whatever they would do over there has been pretty amazing. And I think now that he has their blessing, he can do whatever he wants, short of a revolution in China. So yeah, I think so. I think you're right.
So, moving to, you just spoke about sound money and gold and silver. Maybe we could talk a little bit about silver because I heard from from Chris Marcus actually, who you do work with, that the short positions for the commercials or bullion banks is the second biggest on record, and
Yeah.
usually that means that silver is going to correct back down. But as we speak here on Tuesday, silver is come off a little bit, but it's still around 36.50 the spot price. So just
Yeah.
want to see what you think about that, and then what you think about gold as well, technically and fundamentally.
Yeah. I think Chris is in the process of doing an institutional report. He wants to do a big report and presented to some institutions. And my basically the gold fix is on Arcadia Economics in the morning. And people get a chance to see that there. It's a great community, and I love those guys. I just haven't been able to stop by too recently. But Chris and I will talk frequently about the metals. He'll see something and say, "Is this that?" I'll say yes or no, and I'll see something and say, "Are you getting confirmation?" Just basically two traders talking. And yesterday, as he mentioned to you, he mentioned it to me, and he showed me the chart. And of course, we all pull up our charts, and the chart's like, "Oh, look at how basically the story is the net shorts are the second biggest they've been since whenever." And when they get this big, give or take, when they get this short, silver generally tops out. And that's it. And that's just a small piece of the bigger analysis he's doing. And he showed me the data, and then I did a little bit of regression analysis. And the last two times are rememberable. We'll remember them. The last two times they were this short were, let's say, when the silver squeeze happened, they got really short, and then the market topped and came off. And in 2011 is easier to see. And 2011, now the silver squeeze for your younger viewers who aren't as old as me or even you, right? The silver squeeze ended with them getting extremely short, but that's part of their business. They're market makers who sell it as it rallies and buy it when it dips, but they got overextended, and the market just was like a snowball rolling downhill, gathering momentum, getting bigger. And on the highs during European hours, JP Morgan puts out a report saying out of Europe, says European miners are overvalued. And starting in Europe time, silver just collapsed. And then the open
I
interest,
remember that actually. Yeah, that was
right?
2021. Yeah,
Yeah, it was 2021, right? That
I
was
do.
the right, exactly. The much ballyhooed silver squeeze. But it was just such it reeked of panic. And only the really hardcore silver people saw it for what it was. And I also saw it, but I'm like, oh, is it like they connect the dots in a way that I didn't? I'm like, oh, yeah, you know what? They're right. And so now going back to Chris's thing, so they get over. So here's what happened then in the silver squeeze. We'll do 2011 as well. 2021, the silver squeeze happens. JP Morgan puts out a bearish report on European miners, and that's the sign everyone piles on, and the market craps out. This is after several margin raises, et cetera, et cetera. And so what happened when they got to this short point of being, let's say, too short or overexposed? Uh, a news item comes out after several margin raises. The market continues to defy the news item. I mean, not the news item, the margin raises. The news item comes out and the market drops. So the market goes like this. It goes up. They get too short. It goes up a little bit more, and then boom, it collapses. And I saw that, and I went, wait a minute, I lived through that. And then I said, let's go back to the last time they were this short. And could you pull up that 2011 chart again? That's a great chart. Yeah, yeah. Um, I mean, that the context is $37, but the chart with 2011 during that time frame, silver went up. They got incredibly short. It doesn't look it there, but it's not showing up on your screen. But what happened back then was they rated SLV. SLV got rated for silver. So, but there was a news item, and then the market came off, and then since then, yeah, that's a good chart. Since then, you've seen this behavior that Chris tapped into. I've seen for the last 3 years in gold. I've seen it anecdotally, circumstantially, but gold gets to a certain price, and I see the gold shorts, the banks stop selling. And then I see a news item come out that's bearish. Or worse, here's the worst part. The gold part that everyone is fresh in everyone's memory is when the US started repatriating or having gold delivered here it completely destroyed the UK LBMA. And when they did that, when that happened, the EFP moved, all these things moved, and the indication was that silver and gold, they're very stretched over there, and the coverage of free silver in this instance versus future shorts on the COMEX is about 1 to 1. So they're long all this bullion over in Europe, and they're short all these COMEX futures, and then the US says, I think I want it. And so the COMEX EFP goes like this, and they get killed. So I think you're looking at an industry that this is like a the LBMA has outlived its usefulness. That's
This
really where
chart
I am.
here, um, Vince, it looks
Yeah,
like they can't seem to get silver down anymore because they're like heavily, short. Because if you look in 2021, they only
yeah,
had to get down here to bring
right.
it down. But
Yeah, I can. There's a pic. This, believe it or not, this rectangle here that you have,
yeah,
and comment about look at how much shorter they are in silver than they usually are,
yeah.
and silver continues to climb. There's a tie-in with gold there, and the tie-in is that central banks and China's central banks and insurance and anyone who's de-dollarizing is buying gold, and so gold is money because it's used for nothing else for the most part.
And they buy physical, so this ruins kind of the paper game.
No, well, it ruins the gold paper game.
Yeah, yeah,
So, right, exactly. So on the COMEX and in the West in general, gold and silver are marginable, cross marginable. So if I'm on it, look, I would do this. Okay. I mean, I haven't done it, but I would do this. I've seen it done. And that is I'm on the desk and I'm short gold. And I can't afford to sell it anymore because they're taking delivery now. I can't play the I'll short it on paper and cover it next week. That's how they
What
make
about
money.
silver though? Because central banks are not buying silver, but do you think they're going to be able to bring silver back down? I mean, I made a video, I posted it up on Tuesday that I think
No,
we've got a
I,
break out.
I don't think they will bring it back down. So like you're jumping to the end game, right? And you're right. But I think what they've done, this is why you're going to be right. What they've done is they said we can't short gold anymore. We'll short silver. Now, in the gold rally starting in say April, when the US was repatriating, as gold was rallying, the bullion banks were covering their shorts all the way up in gold. And as the gold rally was continuing, and they covered their shorts in gold, they were getting short silver. They were constantly basically robbing Peter to pay Paul, right? They don't want to cover their shorts because they have cross margining ability, they have positive haircuts, they have carry trades on. And so they continue to stay short metals by covering their gold short and selling silver, which, by the way, tactically works,
Yeah,
right? If the
maybe
market's
that's
slow,
why we've been it's been so surprising to see the gold silver ratio go back above 100. You usually have to have a major crisis to see that. That's
right?
the footprint of this manipulation, I think.
That's right. That's right. I mean, when you see how, I mean, when the gold silver ratio went above 100, let's say during COVID, that was a sign that we're in a gross recession of risk, and that recession is going to. I know you want to pull the chart up. The the recession would cause silver to collapse relative to gold. And that's what happened. But then it quickly unwound. So to echo what you're saying here, the gold silver ratio goes to 104. And it goes to 104 pretty steeply in what month is that?
End of March. So
Starting in March. So from March to April, the bullion banks did nothing but buy gold and sell silver, as well as their clients, as well. So that was basically them throwing in the towel on gold. We can't keep it down anymore, at least for this
so
chapter.
yeah, I guess throwing the towel in silver now will probably
That's right.
the
That,
reverse.
that's right. That's right. In fact, if you look at the behavior of not just gold and silver, but gold, silver, and copper, you'll see that. I mean, that's not an easy chart to put up, but As for the last, say, 7 days, gold has been, I'm simplifying, been unchanged. Silver has been up 12%, and copper has been up 3 or 4%. And the reason for that is all these guys got caught off sides. They're long gold. Like here's the story that makes sense. They're all long gold, worried about tariffs. They're all short silver, thinking we're going to have a recession. And then Trump starts having his tying back to our first topic. Trump starts having conversations with China, and now they're like, "Oh, the economy might be okay. We got to cover our silver because that's an economic metal. We've got to cover our gold. Well, half of them are long, copper. We have to cover our copper, but half of them are long copper anyway. But everyone is selling gold, not short, getting out of longs, and everyone is covering shorts and silver. And so you're looking at the gold silver ratio almost be like a tariff barometer. Tariffs, yes, goes to 104. Tariffs, no, goes to 90. And that the long and short of it is, um, I think if you, it's not just silver. They were short platinum against long gold. Big short platinum against long gold. They were short silver calls. They were short platinum calls. I mean, this is from a bank trading desk. I'm not just like having an opinion on it. This is like what they said to me. Um, and they had been buying gold options and financing it. They don't want to pay for anything. Buying gold options and selling silver options against it, and then bragging about it when gold goes up $300 and down $200 that they're making money in their gamma and silver's unchanged. Well, this is silver's revenge. In fact, it's platinum's revenge as well, and that's it. I think there's a grassroots movement again in the white metals. Uh,
Yeah,
uh, and I say white metals because it's kind of crazy because historically, when the PGMs catch fire for their own reason, let's say it's platinum or palladium thing, whatever's going on in those markets, you'll see silver rally too. And the lesson I learned was, why is that, from an old Goldman Sachs trader? And he said, well, it's white. He goes, well, who cares? It's a different metal. He goes, no, it doesn't. It matters to the people that are short. They're like, oh shit, I may as well cover my silver,
yeah.
and you get the rally.
Yeah, I spoke about this recently that uh, gold started going up in '02 and it was up like 50% almost by the beginning of 2004, but silver was still like unchanged or down, and then it caught up,
Yep.
took off in '04, and didn't mean to say that gold stopped going up, but gold kept going up, but silver really accelerated, and I think that's where we are. I mean, yeah,
I, I,
comparable
I think
to
I
that.
think you're right. I mean, on the really, really big moves, to your point, gold leads and silver follows. And there's many reasons for that. And one of the '02, '03, what would be the reason for gold going up back then? I guess I think the GLD ETF probably started then as well. And
Before it started, but maybe the Gordon Brown bottom, and maybe also 9/11 and the
oh, 9/11. That's how could I forget that? Yeah, 9/11, right.
yeah.
That 9/11 made everyone think about that. But they buy gold, they don't buy silver, right? And so be, and here's this is key, I think. You know, nobody really has talked about this. Maybe you have. I know that you understand it based on what you just said. But over the years, Wall Street financial institutions pitch narrow solutions to narrow problems. So, what's a phrase that you'll hear them use? We would hear them use this, right? Um, a pure play on inflation, buy gold. A pure play on economic recovery, buy copper. What's silver? Silver is not a pure play. It's a hybrid. It's an orphaned metal. Not for us, but for them it is.
Yeah.
Especially when you say, look, silver is a byproduct of nickel. It's a heap leaching
Yeah.
waste product. It just gets a
Well, it's
horrible.
also a strategic metal for the military.
Right, but
Yeah, a
they
lot of
don't call it. You ever
these
wonder why they don't call it that?
these traders, Vince, if you threw a gold or silver bar, they wouldn't know what it was, or gold and silver coins. They're just playing the paper game.
The what's the old the sardine joke? The trader who is suspicious of the sardines. It's like a China sardine contract, and he goes to the vault and he goes, "Let me see these sardines, that are going to be delivered." And the guy opens it up and he goes, "These sardines are bad." And the tri and the Neo-Keynesian vault operator says, "Well, sir, these sardines are for trading, not for eating." And that's the paper gold game.
Yeah.
This gold is for trading.
Talking about sardines, when Eric was here in London,
Oh
he
yeah,
he'd been to Portugal, and this is it says gold in Portuguese, and it's a sardine can, but it's really popular there, and it's made like a gold bar. So
that's a that
you can eat it, but I'm not going to do it. It's just
wonderful tie-in. That's a wonderful tie-in.
yeah.
But
So there you
but
go.
um, yeah, so I mean, if you if you showed that to a bank trader, they might think that it's actually sardines and not gold. They would say, "Oh, this gold is for trading, not for eating."
Yeah.
Anyway, um, yeah, I think when enough people get into a crowded trade, back to the whole pure play thing, eventually it blows up in their face. The last time it blew up in silver uh, was in 22. Right. You had mentioned earlier when the war started, you said that's when the Fed started uh, uh, fighting inflation. That's when we started raising rates in the US. And you could see like for months the chart goes in silver and gold, but silver's like down, 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 starting in April through October. And at that point, everyone in the US was selling silver for economic purposes because they were long stocks. Some were buying gold because of the war and selling silver. And everybody put this massively tilted trade on, skewed trade. And then when it, right before, let's say October, India started buying silver
Yeah.
and they started buying it. Remember that? They
Yeah.
started buying it from London. And sure enough, all the wildebeest or lemmings or whatever you want to call them said, "Oh no, why is silver going up? I don't know. Just cover it." And so silver is the Roach Motel if you're short. And to your original point, silver lags in the bigger moves. It doesn't lead. And so we are in the middle of potentially the biggest move of all time. There's your title, right? And that move would say that gold's at 3,300 and it's staying there. And as long as it stays there, then the other commodities have to catch up to it. It's not just silver, it's platinum, it's
Yeah.
palladium, it's oil, it's everything.
Yeah, in 2020, gold led all the commodities, and then they caught up and went even higher. Well, Vince, I'm not going to keep you any longer. I just want to thank you for your time, and I really enjoyed speaking with you.
I enjoy the back and forth because
Didn't feel
both,
like an interview.
I'm sorry, what?
I said it just felt like a conversation, which is nice.
Yeah. So wait, let me ask you a question. Uh, do you do you think, positioning yourself in the UK, I mean, you're in the UK, right? But from that perspective, do you think that uh, there is a problem with the governance of the bullion banks over there, the LBMA, right? I
Yeah,
mean,
I mean, I do, and I've spoken to David Jensen many times, and he's done really good research. Basically, in 86 or 87, Margaret Thatcher brought in this big bang to deregulate all the city of London. And what
right,
that did, that kind of destroyed all the stuffy merchant banks, and the
right,
big American investment banks came into London.
right,
And that, in this big bang, there was talk that the Bank of England would regulate gold through the LBMA, but he's read up on it, and he says that basically the LBMA is like it's like the Wild West, and the banks make the rules as they go along. So there's no governance whatsoever. They're
that
left to do whatever they want.
that's so hearing it. from you put that way and from your proxy, that confirms everything that we've seen in the gold run up. I mean, what were they saying? It's heavy. They were joking about it. There's the, we can't fit the lorry through the door or the trolley. The lorry's the truck, right? We can't fit those through the door, and we have plenty of gold, but we're going to add 60 days to it. And from a bureaucracy point of view, like we're so much more bureaucratic than you guys are, than the UK is nowadays. But this LBMA governance is just like a legacy infrastructure of the guilds. It's horrible. And all they do is, I mean, it's my opinion, right? You don't have to agree with it. All they seem to do is act in the best interest of the people who give them the most money and whoever that is. And so the LBMA banks, Wild West, it's like the U.S. energy markets in the after deregulation, after natural gas. We're all trading over the counter. I'm borrowing natural gas from you. You're borrowing natural gas from me. And then 6 months later, I collect it from you. And then all of a sudden, a little free market competition. And it's like, I can't pay you. You can't pay me. That's Enron. That's what happened there. And I think we had at least one bullion bank that would have gone belly up had they not done what they did over there. And so I'm glad you agree. I think the LBMA
Oh,
is a waste of
I do agree. I mean, I've been following gold since '02 when I bought some coins, and,
time.
and I wasn't trading the gold market. I was trading government bond futures as a broker.
Mhm.
But I followed gold every day, and I could see there's something wrong. And I knew back then already that the LBMA and the bullion banks was like a mafia, basically. So, yeah, I agree 100% with you.
Well, thank you. That makes me feel better. I guess misery loves company on this point.
Great. Thank you, Vince. And I'll keep reading your research. And for the viewers as well, I'm going to put a link to your Substack below in the description. And I wish you a great day.
Thank you, Merritt. Thanks for having me on. Always great to have a chat with you. Thank you.
Take care.